Welcome back to Uncovering the Dirt, your go-to podcast for insightful updates on the financial market's hidden twists and turns. I'm Dusty, and today we're going deep into the trenches of Tesla. As of April 8th, 2025, Tesla's stocks are experiencing more shifts, and not the kind you'd ideally enjoy. Let's kick things off with today's market overview. Currently, Tesla shares are trading at $233.29, reflecting a 2.4% dip from yesterday's close. That's a notable decline of $5.75, continuing a broader downward trend we've been witnessing all year. It seems like only yesterday people were talking about Tesla's meteoric rise, but now we've seen over a 42% fall since January. What's driving this significant drop? Let's dig deeper. First on the docket is the issue of tariff policies. President Donald Trump recently rolled out a new 10% baseline tariff on all U.S. imports, something that's hit Tesla particularly hard. Elon Musk tried negotiating to remove these tariffs, but it looks like those efforts didn't pan out. As a result, Tesla's sales and stock have taken a noticeable hit. Never a dull moment when policy meets business, right? Next, let's talk sales performance. Tesla reported delivering 336,681 vehicles in the first quarter of this year, but that's a 13% decline compared to last year. Factors include consumer backlash in Europe, fierce competition from Chinese companies like BYD, and the logistical hurdles of transitioning production lines for Tesla's updated Model Y. It seems the auto industry isn't leaving any room for missteps in this fast-paced race. And just when you think it couldn't get any more complex, leadership controversies make their entrance. Musk's recent stint with the Department of Government Efficiency and his public political stance have sparked protests and even vandalism against Tesla in Europe. It's hard to separate personal and professional worlds in business, yet they intersect more frequently than we'd like sometimes. To top it off, investors are responding too. Concerns over Tesla's position on workers' rights led Swedish insurer Folksam to divest its $160 million stake. Ethical investing is gaining ground, pushing companies to align with not just profitability, but also social responsibility, a theme that clearly resonates here. So how should we navigate this swirling sea of market volatility? Here's my take for today's investment tip. Stay informed and flexible. Understand the underlying market pressures and current events that can impact your portfolio. Tesla's situation reflects how a mix of political decisions, market competition, and leadership dynamics can drastically alter stock performances. Diversifying your investments might help cushion against such unpredictable shifts. Wrapping it all up, these swirling dynamics around Tesla are a quintessential example of our favorite phrase around here, uncovering the dirt. In the coming weeks, how Tesla navigates these waters will be crucial to watch. Keep your ears to the ground and your eyes open. Thanks for tuning in to this episode of Uncovering the Dirt. As always, stay curious and keep digging for the deeper stories. I'm Dusty, and I'll see you next time when we return to sift through more layers of financial intrigue. Stay sharp, everyone.